Well, good morning. It's me, Kenny Polcari, your host of the party, and it is another spectacular day here in South Florida. And today is Monday, June 10th, 2024. And here are the things you need to know to get your day started. Well, Friday, it was a tale of two cities, right? The NFP report says strength, while the unemployment report says caution ahead. This week brings us the CPI, the PPI, and on Wednesday, we're going to get the June FOMC meeting, right? We'll get the results from that meeting. Gold is down, bonds were down, yields were up, and oil is kind of holding steady at flat. U.S. futures this morning are lower. The VIX is just a little bit higher in front of this week, which is probably going to be a little bit volatile. What do we have for dinner tonight? We're going to have the grilled pork chops and a Dijon marinade. So delicious. Okay. So stocks ended the day on Friday a bit lower, although nothing really to write home about. The Dow lost 88 points, the S&P was down 6, the Nasdaq was down 40, the Russell's down 23, and the transports were down 49, while the equal-weighted S&P lost 24 points. It was, as I said, a tale of two cities. Talk about confusing, right? The NFP report, known as the Establishment Payroll Survey, revealed that we created more than 270,000 jobs for the month of May, which was 90,000 more jobs than expected, right? We also learned that the average hourly earnings month over month and year over year rose by 0.4 and 4.1% respectively, more than expected. Again, not so helpful to JJ, which suggests a hot jobs market and a Fed on hold, right? And then on the other side, we got the unemployment rate, known as the household survey, and that ticked up to 4%, right up from 3.9%. And that showed a loss of 408,000 jobs over that same period, which is a bit confusing, is it? And it would suggest economic weakness and then maybe a Fed on the move. Now, how can the government say we created more jobs in one report, yet the household survey says, nah, not so fast, boys? Sounds illogical, doesn't it? Well, the NFP focuses on job creation by employers. The household survey focuses on the experiences of the individuals and the actual job seekers. So, while businesses may be creating new jobs, it doesn't mean that people are not losing old jobs, right? Leaving us to ask, what will the Fed do now? I say they do nothing, but I've been saying that all along. Now, this week brings us three key data points, right? And that's going to really, those three are going to steal the show. The other economic data points this week are all going to play supporting roles in the argument, right? And here's what you need to know. Tomorrow officially begins the FOMC June meeting, and Wednesday brings us the official FOMC announcement. No change in rates is expected. That's the consensus, right? Although there are some that think we're going to get a change, I do not. Wednesday morning, pre the FOMC announcement, is going to bring us the May CPI, the Consumer Price Index report, which is expected to show top-line inflation rising a 0.1%, which is down from 0.3, while year over year is up 3.4%, unchanged over last month. Core, right, it excludes food and energy, is expected to show a 0.3% increase month over month and 3.5% year over year. But remember, what we found out last month. The producer price index last month was much hotter than expected, up 0.5% month over month on the top line, and also on food and energy, which means that prices at the consumer level should also show an increase as these manufacturers pass along those increased costs to the consumers, which takes about 3 to 4 weeks. Now, if the CPI does not rise, then it means one of two things. The first is that someone's just fudging the numbers, or the second is that manufacturers are eating the increases, which ultimately will hurt their margins, right? And who thinks this is really happening? So I find it difficult to believe that the CPI does not rise beyond the estimates. But hey, we're about to find that out on Wednesday. Then on Thursday, post the FOMC announcement, we're going to get the May PPI report, which, by the way, is expected to drop back down to the prior levels, leaving us to ask once again what's going on. Prices remain erratic, leaving inflation to be erratic, which I think leaves the Fed in a pause mode, and they don't want to be seen as being erratic. But again, I'm only one voice. Now, recall we went from 6 to 7 rate cuts earlier this year to no rate cuts to now a possible 2 rate cuts, which are now being mostly priced in for November and December. There are a cohort of analysts that are still calling for a July and September combination of cuts, but I think that risks of being labeled partisan, right, of influencing the election. But hey, I guess I really wouldn't be surprised if in fact that was the case, but I don't see how the Fed can justify 6 weeks ahead of an election cutting rates. Anyway, on the back of all this, the bond market got hammered on Friday as traders were forced to dial it back on the imminent rate cut story, right? The swap stock market is now pricing in only one cut, and that's not until December. The sell-off in bonds, right? The TLT was down 1.8%, the TLH down 1.8%, and the AG was down 0.9, sent 10-year yield surging by 14 basis points to end the week yielding 4.43%. The 2-year yield rose by 16 basis points to end the week yielding 4.88%. And as you would expect, higher for longer means said gold and other precious metals tumbling. Gold fell by $65 to end the day at $23.25 an ounce. After testing, 2,400, all while the dollar surged the most since January, rising 0.9% to end the day at 104.86. And this morning, the dollar continues to climb higher, rising yet another 0.3 to 105.24, and that is sending gold down another $15 this morning, testing 2,300. Recall, I've been saying that gold was going to be in the 2,400 range, and we tested both that high on Friday and that low this morning. Oil, which has been all over the place, managed to hold tight around the mid-70s, right? Not really moving very much, even after Friday's economic data. This morning, it's down 16 cents at 75.40. Now, a couple of things. Higher for longer could potentially dampen demand, putting pressure on prices, but how long have we been saying that? And next, Iraq, the second largest producer of oil within OPEC, is set to resume exports after they reach a final agreement with the international oil companies. And all that's going to do is bring more supply to the market. And that too will put pressure on prices as it increases supply, which doesn't mean that they're killing demand. It just means that there's more supply. Killing demand is when demand actually declines. We have not seen that. Right? So demand has to decline in order to kill demand, not when supply increases, right? So supply increases will put pressure, but it's not because of demand destruction. Oil remains in the $70, $80 range. Now, no, your eyes are not deceiving you. Nvidia is now $120 stock, right? The 10-for-1 split took effect this morning. So check your account and make sure you get 10 times the shares you had on Friday. But the price is also 1/10 of the price it was on Friday. So while you have more shares, you don't have more money, right? This morning it's quoted at 120 and a quarter. U.S. futures this morning are a bit lower. The Dow futures down 130, the S&P's down 15, the Nasdaq's down 63, the Russell's down 18. Recall that I said that the relative strength, the RSI for the S&P and the Nasdaq on Friday revealed that we were a bit toppy and that a pullback would not be a surprise at all. And here you go. Weakness across the board. Investors and traders are bracing for a little bit more volatility this week, right ahead of the Fed CPI double whammy, and we're seeing that this morning. The VIX is up 8.5% at 1325 in the pre-market as the sun made its way across the sky. You can see the sun's already here. Trendline resistance is at 1410, which is up 6% from current levels. Now, depending on what the chatter becomes is going to determine how anxious or fearful the market becomes. If the chatter becomes more cautious, then watch as the VIX declines and stocks surge. If they calm the whole thing down, then the VIX will subside, right? And stocks will churn in line. Now, will Wednesday's Fed announcement really make a difference? Not really. But if the market hears something more hawkish, then look for a drawdown. And if the market hears something more dovish, then look for the stocks to rally, right? And if the market hears, well, we're still on the fence, we remain data dependent, then I suspect we're just going to churn kind of more in line, right? On the fence means that they are data dependent. And while the data appears to be moving in the right direction, we're just not there yet. And I think that's really the message we're going to get, right? So I continue to think caution ahead and no rate cuts. European markets are all under pressure this morning. France down more than 2% after the EU elections over the weekend saw French President Emmanuel Macron suffer big losses to the far right. He is now calling for snap elections after his party lost after that showing over the weekend. Macron saying, I can't act as if nothing happened. So the first snap election round is going to be on June 30th and the second round is going to be on July 7th. Should Macron lose, he will be neutered until the end of his term in 2027. Now, the S&P closed at 53.46, down 6 points, after making new intraday highs at 53.75 on Friday. As noted, I suspect that we're going to have plenty of volatility this week as investors and traders and algos prepare for and then digest all this information. Remember, people hear and markets hear what they want to hear versus sometimes what is being said. Most of that's going to be at Wednesday's press conference, right? Post the meeting. What will JJ say? How will he say it? Will he change the language in his press conference over what he said last month? Now, that doesn't mean that the CPI and PPI don't matter, because they do, because it offers insight into the path of inflation, which remains sticky and therefore will continue to drive policymaker decisions, right? The supposedly strong NFP, which is really still kind of in question, is keeping the resilient employment narrative alive, defying expectations of an economy suffering from restrictive high rates, likely keeping the FOMC in cautious mode. And remember, the Fed needs to see the unemployment rate rise if they're going to succeed in seeing inflation fall. In fact, recall the narrative was that unemployment needs to have a 5 handle on it if the Fed is going to be seen as being successful getting inflation back down to 2%. Now, while a pullback in the market is imminent, don't rush. Short-term trendline support is at 51.90, representing a 3% move lower from here. Intermediate-term trendline support is at 51.15, and that represents a 4.5% move lower from here. Hardly anything to cause you to panic. Keeping cash on hand that's earning 5+% in a government money market fund is an investment decision as we wait to see how all this unfolds. Remember, you're invested, so you are not missing out if the market should rally. And if we pull back, you're going to have new opportunities to put more money to work. Remember, you're not chasing names or sectors that are extended. Call me to discuss this. I'm happy to discuss the long-term game plan and help you create long-term and generational wealth. Okay. So what do we have for dinner tonight? Well, these are great. You're gonna let them marinate really best to have them marinate overnight, but if you don't have time, marinate them for 3 or 4 hours, it'll be fine. They're grilled pork chops in a Dijon marinade, right? So it's a summertime favorite, perfect on the grill. Try this one on for size, because I'm sure you'll have it over and over during the summer. It's easy to marinate, and after you grill it, it presents beautifully. So for this, you need Dijon mustard, brown sugar, apple juice, Worcestershire sauce, and bone-in pork chops, like an inch and a quarter, inch and a half, right? For the marinade, you're going to mix a half a cup each of the apple juice and the Worcestershire sauce, 1 cup each of Dijon mustard and brown sugar. You're going to mix it well. You're going to add the chops, put it in a bowl or put it in a plastic or Ziploc bag, mix it all together, and place the whole thing in the refrigerator and refrigerate overnight. Otherwise, keep it on the counter for 3 or 4 hours if you're making it today, right? If you put them in the fridge overnight, take them out of the fridge, let them come to room temperature, light the grill, heat it, get it really nice and hot, clean it. Now add the chops and sear them, right? Turn and let them cook 5 or 6 minutes on one side, and then turn and allow them to cook on the other side 3 or 4 minutes, depending on the thickness, right? You can dip them in the marinade when you flip them if you want to just try that, one more time. When they're done, remove and cover them with foil. Let them rest for 3 or 4 minutes. Present this meal on a plate with garlic mashed potatoes, corn on the cob, which you've boiled in a pot of water, and enhanced with butter and whole milk, right? Put that right in the water and boil the corn on the cob like that. Have a large mixed summer salad, red onions, tomatoes, cucumbers, chichi beans, even blanched French cut green beans if you want. Dress it with a red wine vinaigrette, and some olive oil, salt, pepper, oregano, and you are done. Simple, all done. The whole thing, start to finish, might take you, once you start to cook them, this after you marinate them, the whole thing, start to finish, might take you 45 minutes by the time you do the mashed potatoes and the corn on the cob and you grill the pork chops. In any event, it is Monday. The week is just beginning. It's going to be a very interesting week. Until tomorrow, take good care.